What is happening? How we doing, everybody? First things first, I want to start off by saying I hope everyone has had an amazing weekend. We're of course a little bit later into Monday than usual, but we are ready for this week. So this week we decided to do something a little bit different, and that is give you guys a run through from where we left off last week to where we want to be this week. So we're going to give you guys in this video a relatively easy guide to follow in terms of creating your own overall outlook for the week. It's going to allow you to follow the same basis, and it's also going to allow you to realistically come to a pretty consistent conclusion week on week as to what you can expect. So the first thing that we have done this week is we've left our charts as they were. Now I did delete some objects on the gold chart because I kind of came up with this idea as I was about to start my Sunday markup, and I thought to myself, what would be more valuable for all the people that actually watch our videos week on week? Well, what would be more valuable is for us to actually walk you guys through it and explain it to you in a way that you can replicate, rather than us just saying this is the conclusion we've come to. Why don't we show you it in a real world usable situation? So you're going to see how we go from previous week markups, which I'll show you here. Of course, we're not going to do the literature because that's, the boring side of it. But we'll show you how we get from our plain old chart when this decides to load for whatever reason. Let's go back to here. But how we get from our plain old chart to a relatively consistent conclusion basis across what we can see from the beginning till the end of our overall markups. So we're going to be doing our two favorite pairs here, which we class as our major pairs, which are euro and gold. Now if we go over to this chart, you will see the markups. This is the 11th, same here for the 11th. So we have left our charts pretty much untouched from this overall analysis, and again we give our breakdown in our videos and in our literature, but our bias here was for price to run higher, whether it ran higher from the 50% like we showed here, whether it ran higher from the overall area of demand here. We wanted it to go higher and take this liquid higher, right? And it's exactly what we got. So we had a very clean and consistent idea behind this, exactly the same as we did with gold. We had the bias of this area showing us possibly a short-term sell, only short-term, but overall we wanted to run the highs. What did we get here? We had a short-term sell-off and then price ran the highs. So we were pretty much bang on with what happened on both pairs. But how did we come to this conclusion? And this is what we're going to show you today. So as you can see, these are untouched from last week. The first thing that you want to do when you come to your charts, we're going to start off with euro here, and we're doing ours on the 4-hour time frame. Now, time frame is always going to be relevant to what kind of basis you're trading off of. If you're a swing trader, you might want to do this on a slightly higher time frame, but of course, a 4-hour will work. This would be more your entry time frame analysis if you're a swing trader. If you're trading on the 4 to the 1 hour, this isn't going to give you a massive outlook into the future, but it will give you an idea for the basis of the week. The reason I like to use the 4-hour is because I generally look towards the 1 hour for my daily trading setups. So using the 4-hour gives me a little bit of a larger view across the time frame that I use for sort of confirmation. So if I can get a basis built up around this, then I know once I have the slightly lower time frame, I'm aligning higher time frame bias, I'm aligning my overall view, I'm aligning all of the key factors. So first things we're doing is we're going to eliminate points within this markup that aren't really relevant to us anymore. They may become relevant again, but until they do, we want to just keep our chart as clear as possible. We can of course leave the contextual stuff in so we can see sort of the key elements of what's happening. But the main principle here is that we don't have a super cluttered chart with loads of stuff that we're not really going to be using. So the first thing I always do is start at the low end, because when you're up in these highs, coming down into these lower areas is of course the least probable scenario. So we're going to start off by deleting this stuff. Now remember, even if you spend hours marking up charts and you spend all this time marking up all of these relevant points that are relevant to you at the time and you delete them, you shouldn't be worried about deleting them. You shouldn't care about deleting them. If your analysis is consistent and you've learned the right way of analyzing, you will have the same markups again and again and again and again. Okay, so don't worry about deleting data that doesn't really, give you any context to what you're actually looking at this week. So the easiest thing that I've always said, and this is something I teach all of my students and all of the members in the Discord, okay? You can literally determine your bias for the week by just looking at what a chart's doing on a higher time frame, okay? Now, of course, this isn't going to give you a 100% hit rate, and it may not even correlate to your trade setups themselves. If a chart starts in the lower left of your screen and it ends in the upper right of your screen, your bias is most likely going to be bullish. Again, this is going to be time frame dependent, and of course it's going to depend on where your setup time frame is based within there, but probability tells you the overall movement is up, so we should expect that continuation of that. Don't hunt reversals, follow trends. Okay, keep it simple. So the first thing that I'm noticing is our bias overall was last week we created liquidity within here, and then we continued that upwards move, taking out the previous high. We now know that this high is a break of structure, so we can mark this high off. Instead of it being liquidity, it now becomes a break of structure up. Okay, so again, we're continuing this high. So what I always do is I find a good point to start, like I say, around this area, which is where we left off last week, and we follow through into what has actually happened. Well, we've had a clear bullish shift up, telling us that the momentum is clearly up. We've pulled back down again, and we've now met the last liquid high. Now, what haven't we seen within this movement yet? We haven't seen any significant pullback or any lows being taken. So in terms of swing structure, we have a low right here, a high right here, and then we have this low and this high. That's where we stand right now. This is our larger time frame range. We've now liquidated this high, so we look for price to put a new high in, pull back, reaccumulate orders, and then go lower. Sorry, go higher, and then possibly come back into the range to then continue going higher. So what did we have? We had the establishment of a high, we had the pullback, price going lower, and then we had the price going higher again. So expect some form of pullback, whether it's a pullback all the way back down into this range, whether it's a short-term pullback into here. That's what we are doing now. That's what we're doing within the 4-hour analysis to be able to work around what the possibilities are. So first of all, where are our targets as it stands? And where is price building liquidity? So the liquidity for us right now is across the lows. Okay, so it doesn't really hold a huge amount of relevance for us because we are overall bullish. The last structure break was to the upside. Where was the high that formed after this? Well, it was right here. That high has now been liquidated, so we can class this as a liquidation. We can mark that as a liquidation. So we know after a liquidation, especially on the higher time frames, there is probability for price action to fall back towards the areas that cause that price action to occur. Therefore, meaning we have liquidity at the low right here. So we can mark this. And again, if you want to go back and look at these, like these markups, for example, you're going to see the same basis. What have I done? I've defined liquidity. I've defined highs that hold liquid. I've defined points where price may pull back to. And then continuation is the most probable idea. So right now we're defining the points that price may want to pull back to, because if this becomes our established high, which we haven't actually confirmed yet because this candle still has 1 hour 15 minute, there is potential for this to just continue up through here. Now, of course, if it doesn't, we'd look for that pullback, and that's where we look for high liquid areas, high probability areas for price to get back in. Now, the first point we want to look at is, where did this break structure come from? We know the liquidity is based across the lows, so overall we could just be making some more institutional directional movements. or we're building this liquidity for it to be taken. Now, this is our area of demand, responsible for the break. We never tapped back into this, making this a high liquid low, also joining the trend directional movement. We've taken the previously placed high, now telling us that a liquidity sweep has occurred and that a pullback within here is possible. So now we just have to establish what the principles are within here. Is price going to pull back fully? What do we expect from it overall? Now, like I say, you can take your overall analysis to a higher time frame if it's preferable for you. But if you expand too far, you're going to be going into sort of multiple week movements. If you look at all of the markups we give out every Sunday, using the 4-hour time frame generally gives you a pretty good idea of the overall movement for a week. We don't want to over expect the market movements to occur. So first thing we're going to do is we're going to mark up some potential of what we explained a minute ago, which is just a basic continuation. Okay, so this is the first thing. Now, like I've said before, when we mark up these trend lines, if you were, this isn't a support resistance based analysis. This is a where are the major lows? What projection are they creating? So what is the most probable projection for the next low? Well, it's going to be roughly in line with that. Okay, so seeing that overall trending move, this is why trendline traders relatively have a pretty high success rate, because they just follow a trajectory of price. If it's trajecting up, we were looking for that trajectory to the upside, right? So right here, if price decides to pull back, then we can expect a push from here. So notice how automatically that just becomes aligned with what we just said, where we've liquidated a high. There could be a pullback within the price action. So the first point it's taken us to is a liquidity overall creation to go higher, and that will run us up to the high. Okay. Of course, we have the possibility of just a pure continuation through here. We'll put that as well. So remember, we're not trying to be correct here. We're just trying to have an idea. If we get to a point of relevance, for example, we get sort of here, which again will correlate something in here as well, and then we start seeing bullish price action occur, that's our basic trend continuation. Okay, we don't want to put all of our eggs within one basket, which means have one area highlighted, have one setup, and then expect it to play out. We know the market does whatever it wants to do, so we're just going to accept that the market may deliver to a certain point, it may not. So from where we are right now, we have a liquid low, we have an area of demand, we have a possible liquid high. We're not going to mark that yet because it's not actually a liquid high yet. We have an overall trajectory of price traveling higher. Now, what I'm going to highlight here is this candle. Okay, this candle is the first candle, and I'm going to change the color of this. This is the first candle before the imbalance started being created to the upside here, meaning that there is order sitting in this relative area. Also conveniently correlates with the trajectory of price action currently. Okay, so we're not focusing too much on structure, we're looking more into what is price action doing in terms of direction. So we have a potential for price pushing higher. And remember, if it does just push higher, then we have to sort of reanalyze these markets, because we can't keep the same points in play if price goes higher and delivers like a whole new range and a whole new order block, whole new high and all that kind of thing. So we have to be realistic. If we need to do a midweek reanalysis, we will. That will be, of course, within the Discord. Now, watching price action pull back within here, if we have a reaction, we can look to go long. Perfect. What's the other idea here? Well, we could break down through this, which is going to lead us in towards our liquidity that we have marked, and then into the area of demand. Okay, so notice how all of a sudden we're starting to see these bases building, and price can begin to actually show us some correlation between these movements. Now, if this doesn't play out at all, we have the other potential of price running all the way through the lows, which would actually give us a completely different directional bias, and this would align more with the higher time frame. Now, we did speak a few times on Euro itself, because this is obviously the 4-hour chart, but we did speak a few times on the higher time frame overall direction of this being bearish. Now, the higher we travel, the more it puts us back into a consolidation basis rather than it being in a clear trending basis. So we're just following the 4-hour for now, as this giving us the clearest trajectory of price, which is up. So if we do not react here, we'll expect price to come down and take out this low, which again will change our bias, as I just said. So we're going to mark this as a liquid low, as we know that is a clear liquidity low. Now there is a liquid low under here as well, but it's more of a trend line liquid within here, so across these lows. So I wouldn't expect that to come down and target one particular low. If we get into this low here, I believe that we'll take this. So from where we are, we have pretty much given ourselves a super simple basis to follow, which is what is the primary direction of price? Primary direction is bullish. What is the overall trajectory of price? Because remember, the steeper it is, the harder it can be for price to sustain this. Overall, we have determined the trajectory sits around this kind of area. So pulling back to the median of that is a very probable idea. We have an area of orders sitting in line with that. We have the initial area of orders that created our last shift. We of course have our liquid lows as well. If price action doesn't pick up and go again, then we're obviously going to go lower. So now we have pretty much every basis covered. If we go higher from where we are, we will have to reevaluate, but that is unfortunately something that may happen. So that's Euro, okay? So notice how there wasn't any crazy, like, in-depth looking at individual candles on lower time frames. We're literally looking at what is price doing, what is it most likely to do, well, it's likely to continue. So expect it to continue going. So that's Euro. Now we will be applying literature to this markup to explain in a little bit more detail within our trading view. So if you do want to, of course, look at that, then you can. You can find all the links to all the good stuff that you need down below. Let's go over to gold now. So again, gold is the same thing. We have left gold pretty much untouched. We did delete some of the objects, but we've left it untouched from last week's markup, which was this. Okay, so we had a clear breakdown of the original trajectory, but our overall bias was for price to go high. So we had one area of demand, which actually should have been green, but it was red. We said if this area of demand fails, we're going to run down into these lows, being this low and this area of demand below. If not, we're expecting a medium reaction within here, and then the highs to be taken. And as we showed you earlier, it's exactly what we got. A medium reaction within the same trajectory, and then price going higher. Now, why is it that we said price action could consolidate around this point? Well, all of the original investment directions were right here. So if we're going to see price react, it's probably going to be in a similar area, because remember, most major institutes and funds work on a dollar cost averaging. So based off of a dollar cost averaging, the average cost of the investment is going to be in a similar area of the trajectory. Okay, so it's all based off of where is it that the big guys are getting in and out. Well, generally they're going to get in to sells in the middle of the overall downward trajectory, or the upper end of it, and the same with the buys. They're going to get in at the middle, so they're going to get in around here, or they're going to get in at the lower end of it. Okay, so they're always going to want to be on the better side of price. So we've seen price come up high. Now we actually created all-time highs on gold, which puts us again into a small how would I say, inconvenience, if you were, because we have to reevaluate potential here. because it really only gives us options for price pulling back. So what we're going to do is we're going to mark this initial high as being broken, and we're going to delete some of the stuff that doesn't really help us anymore. So we're going to delete this. We'll delete this now. We'll leave that liquid low there because that is a major liquid low. Let's just tuck this stuff in because we don't really need this anymore. Okay, let's delete. You know what? We'll carry these over. Same with these. Let's just delete these. Okay. So I am gonna let me get this. If I can actually grab that. Get this and this. Just get these all moved over so we can reuse them. And then I'm just gonna select this stuff and change the visibility so we're not having to deal with it being all mushy and on the chart, right? So we can actually pull this out and continue to see that price is actually following a similar principle. If we move it down slightly, actually works perfectly there. And again, we're not looking at this as a trend line. It's a trajectory of liquidity. So what is the overall collective of big investment doing within price action? This is the general trajectory they're following. Now, we will leave that there for now. It doesn't really hold much value for us because the liquidity is building to the downside. So what we're going to do is we're going to pull this out, but we're going to leave it there actually. And we're going to find our liquidity. So straight away, notice how it's the first things first are what is it that the market is looking to do? Well, it's looking to collect liquidity. So where do we look? When price is moving up, we look at lows. We look at collective lows. And we look at our targets. Okay, so it gives us an area to buy from and an area to buy to. Okay, so we're not just, oh, it looks good to buy from here. We have an idea. Price action is creating liquidity in a given area. So that's our trajectory right there. I'm just going to pull that right in. That's our trajectory right here. So we know that that was the initial investment. We had, again, more investments here, and price is going high. We're not looking to buy off of a trend line. We're looking to follow the direction of a trend line to lead us into a supply and demand situation that correlates and we can bring into a real world example. We're not looking to just trade off of a trend line, okay? This is not retail trading. So if you're only just joining us here, we're starting the overall outlook on gold. If you want to rewind back to the beginning, we're walking you through how to come to the conclusion week on week to have a regular, consistent outlook within a Forex pair on a higher time frame. Again, time frame is going to be based off of and around what time frame you actually trade. So the first thing that we're doing now is we know that we have liquidity at a major low right here. We have liquidity across these lows, but we're not going to mark these as that's really not somewhere we can expect price to reach into right now. We'll mark them as a collective rather than marking them as a singular low. And then at least we just have that in mind if price does get down into here. So first things first, where is the overall high interest area that has caused this breaker structure here? Well, the larger time frame will show you something like that, which will be the order block that caused the break. But we're not trading that higher time frame. So what we're going to do is we're going to focus in on the momentum within the market. What are we seeing right now? Well, it's clearly up. Okay, so it means it's going to be within here. Okay, it's going to be within this area where we're going to want to try and focus in on orders. What's the current trajectory of price? Well, it's clearly up. Okay, well, notice how we have something again. We have a clear area. It's actually this candle. A clear area right there, which is the unmitigated candle before the bullish FVG was created and price action took off to collect ultimately the liquidity sitting above these highs and to break structure, taking price action into that new all-time high. So first area sitting back in that trajectory. If we mark this as a liquid low. So our first area of price action is for a continuation high right here. Now where's the high? Well, the high is very simple to see. It's right there. So we have a from and we have a to. We now need to just work out, okay, is this probable to actually work from here? Same thing as we said before. Come to your chart, Very, very simple. If it starts in the bottom left, it finishes in the top right, your bias relatively wants to be aligned with that. Just wait for these to disappear quickly. There we go. Awesome. So we have fair value gaps within here. We have fair value gaps lower down. So we do have an area here. Now this is actually a much cleaner area of demand right here. So we're going to mark this green. Sort of green, cool. And we can automatically just put this here because any area of demand or supply, there is always a chance that it may not react and it may break through, which is fine, but we need to make sure that we keep that in mind. Remember, we're not ever looking at the price action and saying this is 100% going to work. Even once you've worked yourself down to your actual entry time frame, there's always probability that's going to go against you, and you should know that. As a consistent trader and a consistent analyst, you should know this. So we can also do that here, as we have this area right here. So the potential that we have now is pretty simple. Where we are right now, price action may want to continue up to the high or back down to the low. So let's just keep that in mind. Okay. If we go lower, it brings us back into this area of trajectory, which price action going higher. Also aligning with this area of demand, responsible for pushing price through the highs. So it is a refined area of the large time frame order block. Large time frame order block would be, and then again you've got a smaller one within here. So this is a refinement of both. So it's a refined area that price may push higher from, if it even gets back down to here. If not, we run the highs. So if we start seeing breakdown and potential for selling off here, we would only expect price to start targeting these lows if you're going to go with that counter movement. Okay, if we fail at this point, we have a liquid low for price to begin targeting here. So the idea is if you have a sell scenario in here, this becomes your target, not this or this. You know, you keep it relatively in line with what you expect. Then the same principle applies right here, where we have, where we have price action running down to this low. After taking this liquidity, there is potential for price to run higher here. Okay, there is potential for price to run higher within there. And if it does, we'll be playing back into the trajectory area, which more than likely, if we break through these lows, will have left an area of supply that we can begin to sell away from. Now remember, this scenario here is pretty similar to the last one we gave, and if trajectories do not continue, you generally see Institute picking up orders back in a general averaging cost area of that. So breaking down the low and becoming here, where's the average of this? Well, it's going to be around that kind of pricing. That's why you expect that area to be the point price begins to break away from. So we have potential for price to come and play back into here. Now this is only possible if we do actually buy from this point here. Otherwise, we're coming back down into the lower areas here, and then we buy out of this area of demand. And we don't have targets for this because generally, if it's bullish overall, it's only going to be a short-term shift to the downside. So now we have, if price action fails, we have a target here, and a target here. If price continues to go higher, we have our target here. We now know that we can look for potential longs from here if price permits, here if price permits, and here if price permits. We also have potential for shorts from where price currently sits, a retest of the overall trajectory, here if this order block fails, and here if the area of demand fails. So we now have a pretty consistent idea across a higher time frame to lead us into weekly scenarios that can actually lead our day-to-day trading. using nothing more than basic understanding of trajectory, momentum, and overall structure. It's leading you into a consistent understanding that you have a blueprint to place on top of your day trading system that guides you into higher time frame potential. So if you have enjoyed this video, guys, please drop me a comment down below. A like would mean the world, and we really do appreciate all the love that we're getting on these videos. Like I say, if you are interested in joining the TradingView community that we have built, and the Discord community with many other traders, then all the links for that are in the description. I wish you all the best trading week, and I look forward to all of the Discord members that are watching this seeing you in our live stream. I'll catch all of the VIPs in our live stream this afternoon. If I don't see you in the next video, hopefully see you in the week, guys. Have an amazing week. Peace out.